this presentation, we will generate, analyze financial reports and payroll reports after having issued payroll for a salaried employee who is also the owner of an S corporation and includes an S corporation medical insurance item, comparing it to prior payroll, which did not have the salaried employee or the S corp owner or the medical insurance item within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our S Corp paid payroll file. We're going to go down to the reports on the left side, and then we're going to select our favorite report, that being the balance sheet. We'll change the dates up top from 01/01/19 to 12/31/19. That's January through December 2019, the period, the year we are working in. Remember that the standard payroll transaction we would think would be decreasing the checking account and increasing a expense account for payroll expense. So we'll first start with the checking account, selecting that checking account item, and we're scrolling down looking for now, actually we're scrolling up. We now have 3 checks in January. The new check here is for Judy Jones. Obviously, it's much different because this is a salaried employee. This will be what we're saying is the owner, and we're going to have a large salary for her so that when we'll see the Social Security cap being hit in the first quarter, so we can see what that will do for the tax calculations. So here's the first side of that. If we go back to our reports, we're then going to see the other side, which is on the profit and loss. We'll do that by right-clicking up top, duplicating that tab, and then going down to the reports on the left side. And we'll be looking for the profit and loss report. So we're going to pick up the profit and loss report, changing the dates once again from 01/01/19 to 12/31/19, January through December 2019, and run that report. We then go down to the wages area. Here are the wages. Selecting the wages, we see now that we have Judy Jones for the 41,666, that being the normal wages, that being, in other words, the gross pay of, we said 500,000 divided by 12. So that's going to be the gross pay as opposed to the net check we saw coming out of the checking account. We also see this 2,000 of the S corporation insurance. And notice that the S corporation insurance is a kind of a funny factor. So again, if you're in that situation, you want to consider it's going to be recorded here because in essence, it's a type of payroll. It's a type of earnings that basically have been received by the employee. In other words, it's going to be also an expense then here. So it's an expense item in the payroll expenses. But then there's going to be some play with taxes in terms of how it's going to be in relation to the S corporation return and the 1040. So it could be as a above the line deduction on the 1040. So again, a little bit funny. You want to make sure that you have an understanding if this item applies to you in terms of how to enter it logistically, this is what we're doing here in terms of that payroll item, and then how to deal with that when you actually record the taxes. How do you get the deduction playing between your S corporation term tax return 1120S and your 1040 tax return. So here's how it plays out. We've got the gross pay and then that 200,000 added to it, meaning they're both included as an expense here, both decreasing the net income, which for taxes would be the taxable income. So then we're going to go back to our income statement and then go back to the next component. The next component, the difference between those two, would be, as we've seen in the past with prior payrolls, in the withholdings, partially the 941 and the 940. So if we select that item, or the 941, which includes the Social Security, Medicare, and federal income tax. So here's Judy Jones there. Here are the items related to Judy Jones. Again, of course, it's larger because those items will be larger based on the salary of Judy. And then we'll go back. The other items that were taken out of the check, Judy had part of the 401k, so it was taken out, so that's going to increase the 401k as well. And any other withholdings, of course, Judy didn't have these, our new employee, but we had the dental withholding, the vision withholding, the garnishment, the health savings account, The medical insurance, this wasn't withheld but paid over and above. And then here is the S Corp insurance. So we basically saw that recorded as a separate item within the payroll expense, a GL account or transaction detail. And then we see it here, of course, us having to then pay the health insurance, it being a liability, as we see with other payroll items. The second half then, if we go back up top to the income statement, is typically the wages. So now we have the taxes. The taxes are the employer taxes. So these are paid over and above the gross pay. If we select that tax item, then we'll see the taxes related to Judy Jones here. So we've got the same idea, Social Security and Medicare and FUTA related to those taxes are included in that number. We're going to go back up top, back to the income statement. The other side of that is back on the balance sheet as well. The other side of the taxes would be included in for the employer taxes now. The 941 line here, federal taxes, which includes Social Security and Medicare employer portion, as well as the FUTA tax. We'll go back to the income statement again. Also note that the health insurance was paid over and above. This isn't the S Corp health insurance because we saw it down here in the wages as kind of another category of wages, which is a little unusual. But we have the health insurance that was paid by the employer recorded separately for other employees other than the new item for our past health insurance, which was employer paid because it's not included in the gross pay. The retirement plan, which is employer paid, not the employee portion being broken out as a separate expense item. Now we're going to add another tab up top. We're going to right click and duplicate so that we add another tab. We're going to go down to the reports on the left side, and within reports we're going to go down to those payroll reports. So we're going to scroll down to the payroll, take a look at the payroll details. So payroll details, and we're going to run the payroll details for the first quarter. So I'm going to select up top. We're going to run this for January through March because we just issued a payroll for January and run that report. We will then scroll down to the bottom to see the January information. So we have Beth here, we've got Anthony, and then we've got Judy. So here's Judy's information. And note what we have, that breakout between the salary, which is the monthly salary, and that 200 or that 2000, which is the S Corp. So that's going to be that special item over here. Notice it's in basically the compensation area, although not included in gross compensation. So then we have the 401k item. This is the employee portion that we had for our S Corporation owner, for the employee information for our S Corporation owner, and then the employer portion of the 401k, and of course the FIT, the Social Security, the Medicare, and the California taxes. We're now going to open up a new tab and look at the Form 941 as it's calculated so far. So we're going to right click on this again, duplicate up top. We will go to the taxes on the left side. We're on the payroll tax tab, and we're going to go to the quarterly form. So we issued this payroll in January. So now we've got another January form. So we're going to go to the 941, and we're looking for the first quarter, January through March. And we're going to preview that payroll. So now we have, in this quarter, we have 3 employees, 2 that are much the same. We issued 3 payroll for one, our Anthony, and 2 payroll for Beth. And now we have Judy Jones, which we've issued 1 payroll for that large dollar amount. We'll first look at the Social Security. So if we consider the Social Security wages, we got the $65,741.67. That's going to be higher than the wages up top, so it's probably closer to actual pay, actual compensation. Let's take a look at our report. Going back to our report on the prior tab, we'll see that the total they have on the report for the total gross pay, regular OT, salary, and S Corp is $68,41.67. So that's higher, of course, than this number. And it looks like that 2000 is not included here, notice. So we're going to say, okay, well, what is that? How is this matching up to what QuickBooks is doing there? So we're going to say, all right, let's say that we have this 68,041.67 minus this 2000. So saying the S Corporation is not included in the calculation of Social Security and Medicare, in other words, brings us down to 6641.67. So if we go back over here, that's still over this number. So this number is not including the $2,000 for the S Corporation medical insurance. So we subtract out now this number from the $65,741.67, we get $300. So if we go back to our report then, that $300 is the HSA, so the health savings account. So note then that the Social Security here is including is not including that $2,000 for the S Corp, and it's not including the $300 for the HSA. And then we'll say, so that's what this is going to be calculated on for Social Security. If we take this number minus this number, 65,741.67 minus the 638,335.41, we're going to get 1,906. That 1,906. If we go back to our reports up top, it's going to be the 401k for the employee contribution and that 2,000. In other words, if we took this number, the 1,906.26 minus the contributions, 3,906.26, not the employer but the employee contributions, the difference is that 2,000. Or in other words, if we took this 3,906.26 minus the 2,000, we get that 1,906. So in other words, the S Corporation 2,000 is in gross income. With regard to FIT, we're going to calculate, in other words, federal income tax on it. However, the 401k employee contributions are not. So you can see how this starts to get a little bit complex here when we start to build these things up as we go. No one rule is that confusing, but when you put them all together, then it starts to get a little bit confusing. So if we go back over here, we've got this number, that's what's being used to calculate FIT. Now we have the Social Security and Medicare wages. At least they're still the same now. They won't be for too much longer once our one employee hits the cap. And then if we multiply that times the employer and employee rates here combined together, we get the Social Security and Medicare for the employer and employee rates, adding them together for FICA taxes, and then all of them being the taxes, FIT, Social Security, Medicare at $20,210, this being the liability. And that's where we stop. We haven't made any payments. But if we go down to the bottom, we see that's also broken out by month. So now the first month, of course, is much larger because we processed that one owner payroll for it and not for the second two for the total. And this total then, you'll see up here, up top, notice it's adjusted because of rounding. The way we had to account for these items and then calculate the totals will result in some minor rounding issues. We are allowed to just account for those here in the form. For more accounting information and accounting courses, visit our website at accountinginstruction.info.